stock market is a fundamental component of the global financial system, serving as a dynamic marketplace where individuals and institutions trade ownership shares in publicly traded companies. This exchange of ownership stakes plays a pivotal role in the global economy, influencing companies, investors, and governments. In this concise overview, we'll explore the key functions, mechanics, and significance of the stock market. 1. Primary and secondary markets. The stock market comprises two primary segments: the primary market and the secondary market. Primary market. Companies use the primary market to issue new shares of stock, typically through initial public offerings, IPOs. During an IPO, a company offers a portion of its ownership to the public for the first time. Investors purchase these newly issued shares, providing the company with capital for growth or other financial objectives. Secondary market. The secondary market is where previously issued shares are bought and sold among investors. This is the heart of stock market activity, offering liquidity, which enables investors to buy and sell shares easily. Notable secondary markets include the New York Stock Exchange, NYSE, and NASDAQ. These exchanges enforce stringent listing requirements to ensure financial stability, transparency, and regulatory compliance. 3. Functions of the stock market. The stock market serves several pivotal functions within the economy. Capital formation. Companies utilize the stock market to raise capital by issuing shares to investors. This capital infusion allows them to fund expansions, create jobs, and stimulate economic growth. Wealth creation. Investors, whether individual or institutional, buy shares with the expectation of making a profit. As share prices rise, investors can accumulate wealth through capital gains. Liquidity. The stock market offers liquidity, allowing investors to convert shares into cash quickly. This liquidity is essential for the efficient operation of the financial system. Information dissemination. Stock markets provide a vital source of information. Stock prices reflect market sentiment and economic conditions, aiding investors and analysts in making informed decisions. Corporate governance. The stock market encourages good corporate governance by imposing transparency, reporting standards, and accountability requirements on publicly traded companies. 4. How the stock market operates. The stock market operates based on the principles of supply and demand. When more investors wish to buy a particular stock, its price tends to rise, and when more investors want to sell, the price tends to fall. Several factors influence supply and demand, including economic conditions. Economic indicators such as GDP growth, employment figures, and inflation rates can sway investor sentiment and stock prices. Company performance. Earnings reports, revenue, and other financial metrics directly affect stock prices. Positive financial results often drive stock prices higher. Market sentiment. Emotions and market sentiment significantly affect stock price fluctuations. News, rumors, and public perception can alter investors' assessments of a stock's value. Global events. Geopolitical events, natural disasters, and global economic developments can have far-reaching effects on the stock market. Interest rates. Central banks' interest rate policies can influence investment decisions. Lower interest rates can make stocks more appealing compared to fixed-income investments. 5. The significance of the stock market. The stock market's significance goes beyond being a platform for trading shares. It serves several pivotal roles in the economy. Economic indicator. The stock market is often considered an economic barometer. Rising stock prices are associated with economic growth and confidence, while falling prices can indicate economic challenges. Capital for growth. Companies rely on the stock market to obtain funds for expansion. This capital injection can lead to job creation, technological advancements, and economic development. Wealth creation. For individual investors, the stock market offers the potential for wealth creation over the long term. Investors can benefit from capital gains and dividend income. Diversification. The stock market provides a broad range of investment options, allowing investors to diversify their portfolios and manage risk. Challenges and risks. The stock market is not without risks. Prices can be volatile, and investors may experience losses. Strategies like diversification, research, and a long-term perspective can help manage these risks. In conclusion, the stock market is a crucial element of the global financial system, enabling companies to raise capital and investors to participate in their growth. It serves as an economic barometer, capital generator, and wealth-building mechanism, shaping economies and individual financial destinies.